Courtney, did you get back over
Hello.
states or no? Oh,
Thanks, everybody. No, you're good, Eric. Thanks for
uh,
joining Now, Next, Later. We are the podcast where we talk about what's going on in housing innovation that informs what's next in our industry. So we have two guests I cannot wait to introduce and talk to. So we won't spend a ton of time at the outset. But Sasha, great to see you as usual. How are you?
I'm doing well. How are you, Jer?
Excellent. I have had intermittent Wi-Fi issues today. So if I go frozen, it's on you. Just
On
jump in
me. Okay.
and take over. All right.
I need something in my
And
office that looks like a torch. I don't have anything.
yeah, there you go. This week's episode is brought to us by FormFree and FormFree Exchange. So I want to make sure that we get a chance to talk about FormFree Exchange, where consumers and lenders can work directly. Lenders compete for the consumer's business, and we're going to learn more about how exactly that works for the mortgage industry. But it is the mortgage industry's first exchange for consumers and lenders to find each other. So I'm really excited for that. And thank you, Eric, for coming on and inviting Courtney to be willing to talk
yeah,
about it. So,
thank
Courtney,
you.
I was mentioning to Eric as we were jumping on that we're not the typical podcast where we go around and explain what we work on, but we want to dive into it because you both work on access and exposure to real estate, specifically residential real estate. So we're going to talk a lot residential today, if
Okay.
that's okay,
Sure.
and how we as a real estate finance, housing finance industry should be thinking about this. So I figured we'd jump right in and we would just kick it off with that question. What are you seeing in terms of access or exposure to residential real estate for your customers? And we'll start with you, Courtney, on exposure, and then Eric will jump over to you on access.
So my background here, I work for a company called Roofstock, and we are a very much prop tech company where we make single family rentals accessible to, anyone in the world. So the founders of the company have been around for 7 years. That was the wheelhouse of Roofstock, is to make investing accessible to everyone. What we've seen is people come in, they know they want to invest, but they don't know how to. They don't even know a market. They just want to have passive income, if you will. So we've collected a lot of data on this, where some people will come in and they're like, look, we want this cap rate, but it could be Indiana, it could be Florida, it could be wherever it is. So I think really educating those potential investors is a huge market that people have to tap into, because it is a large purchase. It's not buying a car, it's a house. So it's always educating those investors and giving them the tools that they need, where they feel comfortable to have that investment, versus, hey, here you go, we're going to drop this on your lap and you figure everything else out.
Yep, that makes sense. One of the things I've always thought about, so I live in downtown Detroit. And when you pay your mortgage every month, I'm fully exposed. I have 100% exposure to the Detroit real estate market. Can you talk a little bit? I've always wondered how to diversify that investment. Can you talk a little bit about the types of investors you're seeing that want that diversity? And do I have to buy the whole rental from Roofstock? And like, how would you think about guiding somebody like me who's 100% exposed in Detroit?
So it's a great question. We've seen, so when you're in a market such as now, it's the institutions coming and taking properties left and right because they have the balance sheet to do so. Last year, or even the prior year, it was more so retail investors coming in because rates were so low, and we could guide them to, okay, we're seeing these market trends. You have like the growth communities, the income producing communities, and then you have the equity communities, where you're not going to really hit a high cap rate, but the home is going to accrue in value. And so you're looking at an equity. Someone such as you, where you have the accessibility to all of these markets, I think it's more so the tools. Like, every investor is different, if you will. They all have their own ways of underwriting properties. So I think it's always interesting to have these conversations where you bring up ways where they may not have done that in a previous transaction, and it kind of opens the doors to what's next on how they can utilize those for their next purchase.
Yeah, that I think that's a great way to look at it. You know, we often talk about how decision makers, whether it's partnership, product development, or making resource investments, we have CEOs that listen, you know, trying to think about where they want to be across the board. And one of the things I think was really great framing was, is this income producing or is this equity producing? I hadn't heard that before, and I really like that framing of it, because now it gives me a new way to think about markets. You know, one of the things that Sasha and I have been talking about a little bit lately is we're moving away from national housing numbers being that helpful to strategic decision makers. It's such a regional thing that it's what you're really asking is, how many regions do I need to think about? Because these big housing numbers are sort of the real granularity of your investments or your decisions are lost in, like, here's what the whole country's doing.
Yeah, I have not seen, I've been here for 4 years. I've not seen one cookie cutter real estate investors where we can pinpoint and say, this is what someone's looking for. I see people that all they want is Section 8 housing because they know that they're going to get a guaranteed rent check, or people on the other spectrum that only want the accrued equity in the home and don't really care about the cap rate. So it's an interesting dynamic.
There you go. I'm back. So on that, I was frozen for a second on my end. On that though, I kind of want to switch gears a bit, Eric, and bring you into the conversation on this idea that this isn't the only thing that's becoming more nuanced and more granular, right? We're seeing this at all levels of data of housing and residential real estate. We're seeing it the way Courtney just described, looking across the country in these markets and how we think even more granular about that. Same thing's happening to people. We're looking at people in a new and different way. What are you credit qualified for? Whether you want to be an investor or a first-time home buyer, we're looking at cash flow differently. We're looking at contextual data. Sasha and I last week talked a lot about trended data and how trended data gives you all this context now to make better decisions off of. And so, you know, when you think about this happening at all levels of the market, where are you seeing it at FormFree that kind of plays into that trend?
Yeah, from what you just described, and you know, the episode you did with Sasha last week, you know, when you're thinking about contextual data, a lot of it really comes down to behavior. And if you really understand the behavior of what someone's looking for, as opposed to just putting it in the buckets of, you know, we were chatting about it recently about the different generations we have. And if we say, well, this is what Gen X wants and this is what the boomers want, you're really leaving out a lot of people that doesn't match their behavior. So I think it's more looking at if a consumer understands the message of what you're trying to provide them, and then they also trust the solution that you're bringing to them, more often than not, they will share their data with you. And then what you do with it, they have to know where it's going. And that's really one of the things that we've focused on here is, you know, how do you bridge traditional finance to the new way of doing it, TradFi to DeFi? And all that really is saying is, at the center of it, especially with what we're talking about here, is the identity of a consumer. And we all have our own identity and we tie information to that identity. Well, the way it's done today is a lot of things are marketed to us or sent to us through centralized third-party companies that know what we're looking for because they know where we're searching, they know where we're buying, where we're visiting, what plane tickets are we getting, where did we buy the house. And a lot of those companies will then use that data where we have given consent to that as a consumer, but we don't really know to the level of that consent that it goes there. And I think that goes back to part of that contextual data piece, that if you could take all the information from me, and if I'm looking for a home, how do I get lenders to let me know what they can offer me based on my profile, but not knowing my name, age, sex, gender, color? None of that really matters, right? It doesn't matter. It just matters, can I afford it or not? And how do they know if I can afford it? Well, then it's based on the data. And if that data is directly off of source documents, meaning we don't have to worry about the, you know, it's the number one, the efficacy of it. Is it data that is true versus, you know, the whole trust versus truth thing that we always talk about. The thing about this is you don't have to trust this data. It is the truth. It is the bank account transaction data. There is no disputing of it. What goes in and what goes out may be disputed, or charges may be disputed, but the actual source document in itself is the truth. So when you're dealing with that and you start building your analytics and intelligence around that, now you start getting a better idea of, all right, what can this person afford based on what I see is going on today, and how does it trend in the future? And that is part of the trending piece that you're talking about with the data as well as intelligence. You can work in parallel with all that. The last thing is, how do you get, adoption is always one thing that's been a discussion, whether it's catching up with friends and colleagues in the industry, side hallway conversations at conferences. One of the things that we always seem to come to is, how's that adoption working for you guys, or what you're doing on the valuation space, or even what I said with you in Philly last year when we had, got together. I'm like, how's the title side going with that? And is this, what's the prohibitors for that, or the objections that you're seeing? And I think with a lot of these things that we're seeing is, with what many companies are working on, we're focused on the consumer ability to pay based off the source data and remove the bias from it. That's what we're doing. And we're basically having lenders and the consumers match together on that. But think about everything else that everyone else is working on. Sasha, what you're working on, Courtney, Jeremy, a lot of the guests that you have on your shows. I think we're getting to a point now in the industry where there's a lot of collaboration. For example, that's how Courtney's on the show, right? I thought about it. I'm like, who would be a good partner to bring on the show that gives a whole different perspective of the real estate lending, and then driving the tech and adoption side to this. And by doing that, taking all of this data that the consumer is permissioning, and you really understand unlocking their borrowing power, what can this person afford? You're starting up here, and then you can start moving all the way down, and then it just trickles down success to everyone involved.
Eric, before we go on, because I'm like the ignorant person that had to Google it, apparently I need to come into the 21st century with vernacular. Can you just tell the audience what TradFi and DeFi means? It makes sense now that I looked it up, and I feel like an idiot, but I didn't know, because I've never heard those terms before.
It's a great question, because I'm sure the audience has the same question. So it's a great question. I was
like, oh my God, what did I miss?
No, it's traditional finance, TradFi.
Yeah.
Decentralized finance is the new way of looking at it. And all that means is, it's nothing more than you're basically separating out the pieces of data that go into a transaction and putting ownership back to the person, the consumer. And I'll turn that over to Courtney, because she can talk about some real life stuff that she's been working on there as well. Go ahead, Courtney.
Yeah, it's almost like empowering the people to do banking in the way that they see fit without the intermediaries. When you think about TradFi banking, it's the JP Morgan, the Wells Fargo, the big banks that tell you what you can do, how you can do it, and when you can do it. With DeFi, and there's a lot of, we could go down a very large rabbit hole with DeFi, but what DeFi essentially is you own your data, you own your keys to your digital wallet. You can do whatever you would like with that. If you want to transfer money in 2 seconds, you can do that via digital wallet on the blockchain. There's no one to tell you yes or no. And when you peel back the onion for different layers of DeFi, there's a lot of functionality within DeFi, and a lot of Web3 companies that are building essentially decentralized banks. So it's even more functionality as a bank would have, but in a permissionless manner, meaning you don't have to go to a bank to ask to do XYZ. You do it on your own, and you have full control. With that being said, the intermediary cost is taken out as well. And I won't go into like gas fees or anything like that, but that's kind of the basis.
Yeah, good explanation. Think about it like this, Sasha, and everyone. If
I know what decentralized is, I just didn't know the new terminology around. Apparently, I need to like get up to speed. I need a lexicon for this.
It's all the same thing. It's just a different language. It's literally the same thing. They mirror each other. It's just you'll hear things in DeFi, and you'll be like, "What is that?" And I've done this exercise. It's just learning a new language. That's it.
I
What's
think it's
best
one of the strengths. I think it's one of the strengths that Eric and I talk about quite a bit, Courtney, is, hey, look, this is solving a problem. We'll tell you later how. But
Exactly.
initially, here's what we're doing and here's what we're solving. And the how is
Yeah.
super fascinating too, but you don't have to lead with the how. You can
Yeah.
lead with the solution. And then the how just kind of comes along with the solution.
leading
Yeah,
with the how's the
absolutely.
killer, especially in mortgage. And the reason is just it's so much to take in, right? We're all just focusing on the day to day of how do we get business better and better for the consumer and stay profitable and stay with the times and all that. But if we really start thinking about, you know, a simple way of saying it is the way that things are done today is, as Courtney said, another company owns our information. Like your Gmail account, you don't own it. Gmail owns it. So if you switch, you don't get your Gmail account or any of the data that you provided in there. It stays with Gmail. So imagine if you had everything in your digital wallet that like, this is my email domain, and I decide I'm going to switch over from this one to another one. Well, then all my data goes with me because I control it. So it's putting control back into people. But yeah, you're right. I mean, when we start looking at in the lending side of things, it really just comes down to, I think a lot of companies work on the experience part. I think the consumer experience has been worked on quite a bit. I think there's a lot of great companies that have done some things to make it better. I think if the lenders really start looking at, or, you know, I'm talking lenders, tech companies, GSEs, everyone involved really starts working with what they see is pushing the needle and what's not, and sharing that information and really becoming collaborative, you're starting to see that movement. It's kind of like the whole, when you're on your rafts and everyone's holding hands and you move down. In business too, when you start seeing that, and I just read a book that talked about some of that, you see businesses move forward and you don't necessarily have to be the only one doing it, because if it becomes the norm, then others will do it with you, and then you get your adoption a lot faster too. So I see that as something later, that as the now next later is it's something that is just one of the pieces that you don't really talk about as a topic, but you really could, right? If you really just said, hey, let's look at these groups and these companies and these people that work at these companies. I like the way they think. How do we give them feedback and help them, and they can help us? I don't think we do enough peer-to-peer communication like that.
I am curious, Eric, a little bit on the how, and maybe it is just as straightforward as one would think. Maybe it's not, but bias is such a huge hot topic in the industry, and it has been for a little while now. And it's something where lenders have gotten their hand caught in the cookie jar, whether intentionally or, you know, just because a situation happened, didn't have the right process in place to prevent it, and it wasn't intentional. How, when you talk about how FormFree was set up to begin with, like what is that process of making sure it is bias free? I mean, is it as simple as it sounds, where you're just not having certain information shared that would otherwise give a person the idea of, and then be able to have that, you know, natural bias happen? Or is it more complex than that?
It's complex, but the simple way of explaining it is it's mathematically deterministic. So what that means is when your connection is to linking bank accounts and transaction data of all sorts of accounts that a consumer permissions, that data is mathematically deterministic, meaning that we have an intelligence that is not asking for anything that would be on a HMDA verified document, for example. So we don't know your name, your age, your sex, any of that stuff's removed, color, all that stuff is removed. And it's not a black box. So it's not like it's a large language model that has to learn something that it shouldn't learn. It's only going to review that math that it's presented to at that time to say, what is the cash flow? What is the discretionary? And what's the index that we can provide to show the borrowing power to someone, saying, Sasha, based on what you've connected here, here's your borrowing power to help you go look for your home. And it's new, it's novel, it's not been done before, but it's based off of the sourced data from a consumer that's permissioned. So there's no worry about, well, where did the data come from? Does the consumer know it's being used for this? The answer is yes. So these are all things that are different. So it's kind of hard to put it into a bucket, so to speak, right? It's not lead generation. It's really just having consumers come out and say, I'm here. I want you to tell me what you can do for me. And now I'm ready to share my information with you, but I'm not going to show you who I am because I don't want to get bothered with 100 robocalls and texts. So,
Yeah.
you know,
And I love that you brought up HMDA because at some point a lender does have to collect that information. And I love the idea of like, how do we get to at least an upfront credit decision that's not biased, but ultimately you have to have that data in their system. So do you guys collect it and then have it available for later on? And it's just not something that's presented up front to avoid that bias, or is that something a lender still has to do separately?
yeah, lender still has to go through their underwriting process. So they still have their conditions and steps that they have to ask for. So they still ask for, as you know, as of today, you still have to pull your buy merge or tri merge. You have to get the W-2s and stubs. If it's a self-employed, you got to get your taxes with Schedule C's and E's and P&L, you know, K1s. You got to get all that stuff still. So it's not to replace underwriting. It's to help the consumer and the lender know before they even go down this, you know, it's like a pre-app versus a, you know, before you even have to go down the looking to a real estate agent or looking to speak with a lender. You're really coming in more understanding of your ability to pay before you start deciding where you want to go with your own data. So, you know, down the road, again, if you really want to see where this can go and the vision of something like this, imagine any type of source data that a consumer can permission, bring that into their wallet. You still don't know it's Jeremy's information, but now you have all their tax info. You also have the house that they're searching for because there's a search option on there as well. You also know the cash flow. You know everything that you can know up front. And maybe there's a question up front that asked, you know, did you ever go through a bankruptcy or did you go through a divorce? Well, those are things that a lender will still have to ask for Chapter 7 or 13, schedule of debts, discharge notices, all that kind of stuff. Eventually, can it get to the point where the platter has shown up with all this information, handed off to the loan officer, and manufacturing costs go from 12 grand down to a third of that? Yes.
I like that you saw.
Yeah, I mean, I think.
Go ahead, sure.
Go ahead, Seth. Yeah,
No,
I mean, one of the
just
things like
commenting that he knew where I was going.
yeah, we go a little bit into policy obstacles as well as technical obstacles here. And I'll just throw one out there, Eric, that you made me think of that, you know, if say as much as you can on the topic or as much as you'd like. But one of the things that independent mortgage companies in particular have done is become a conduit for Fannie and Freddie AUS. And they will tell you they're a commodity, but then in the same sentence, deny that it's just Fannie and Freddie's AUS, that they have this other additional value that they add. And this is somewhat of a friction point right now in the market, I think, when we think about what's next for mortgage sales, mortgage retail, mortgage storefronts. Can you talk a little bit about what would happen, or if possible, we gave consumers the power to know that they were pre-approved prior to choosing their lender? You just described a scenario where they could know that they can afford a certain house because of cash flow analysis, but why wouldn't we just go the next step too and know that, hey, I got the house that I want, I got my eye on it, I got my AUS here, now I'll go find my fulfillment center. What am I missing? How is that not what's next in mortgage?
Yeah, that could happen for sure. I think it's just more of, you can't come in with too much change and get adoption, especially in mortgage. And like, if you heard some of the calls we had internally of what we're talking about and what could happen, it's just like the scaries come out, you know, if you're thinking about your audience. But absolutely that could happen. I mean, think about, you know, but then you get into decisioning and lending, and consumers don't know what the underwriting guidelines are. And they're not expected to know that, nor should they.
Nor should they have to. Yeah.
But also think about the additional use of artificial intelligence, where generative AI can at least pull from sellers' guides and say, hey, you know, based on your question here you just asked, you would meet, you know, XYZ over here, or you meet, you know, the 3% down payment for FHA, but you need to have the following, or you meet a VA loan and your discretionary income per family member has to be this, and you're not quite there. Here's how you can get there. I think those kind of things will happen in the future.
Yeah.
And I think it would be
something
cool.
Consumers do understand, right? They understand a green check mark and they understand sliders and filters, right?
Yeah.
We filter search items all the time. We use our sliders for all kinds of different financial decisions or different types of decisions. So green check marks, sliders, search filters, these are things we understand. That's all we're really talking about in many cases here.
That's true.
Goes back to the conversation we had with Kristen, was it last week? I'm like, time is so elusive to me. Around financial literacy, right? As a baseline, that clearly we need to get better at in general, but also that the framing of how we word things to consumers has to change too, because debt to income and loan to value and these words are a vernacular we understand, but it's not something that they live with and breathe every day. So if we can also find a way to, through these consumer forward solutions that you guys are talking about and offering, put it into layman's terms, and then there's like connective tissue in the back to what that means to a lender to actually make a decision that is in compliance with GSEs and others. Now we're talking about something that's even more powerful.
Yeah,
very true.
Courtney, we're talking a lot here about, and Eric kind of teased us, so we're going to pick up the bait and run with it, which is later. Let's move from now next to like later. And one of the things we just said was, when I know cash flow, I can bring in things like rent. I can bring in things like what pieces of credit I can afford. And where I'm hearing overlap in your world is now we're talking about a much more fluid ecosystem where an individual person as a resident becomes an investor before they become a homeowner. Potentially, maybe they become an investor in the property they're renting, which a lot of what Eric just said and a lot of the technology you're working on can allow for much more fluid relationships in real time, keeping in mind the disclosures and transparency that Sasha just mentioned. But can you talk a little bit about whether you feel pulled like in your work in that direction, or this is such a slow change process that we're really not looking at those types of things for a long time?
So I think a amazing later would be what Eric's doing, where you're doing this data for people's identities and their paying abilities. But then when you talk about, okay, so let's say that that's all owned by the consumer, they're able to do that. Banks can see that and the consumer feels safe. If you flip it onto the house side as well, if we could put this information about a house, inspection reports, title reports, anything pertaining to a house on the blockchain so people can pull it up, think of how fluid that would be at that point. You're talking about cutting underwriting to a fraction of what it probably takes right now. With all this being said, the hardest part that I see and the biggest friction point is when you start to talk about legacy real estate professionals, all they see is, okay, AI is replacing my job. So it's a really hard conversation to have, especially when you talk about putting titles on the blockchain. It's like, what does a title company do at that point? I think it's I like to almost think of it as we have to educate these people to embrace it, because not everybody's job is going to get wiped out. There's going to be new jobs that come from it because they have to adapt to the technology. But it's more so, let's get in front of it. Let's understand how we can utilize it in our business to enhance our business. You're talking about a very, very legacy industry going super tech heavy. We're a little bit too early for that, but I do think like an amazing later would be everything's on the blockchain. Someone goes to apply for something, they found their house and it's an immediate plug and play. It's almost like exposing APIs and you're underwritten within hours versus weeks.
Courtney, first and foremost, I have to just compliment you on taking complex things and making them so pragmatic and digestible.
Thank you.
And look, blockchain to an extent, when you look at it, bare bones is not that complicated, but I think because it is newer and people aren't familiar with it, like it can feel a little bit scary and complicated. And so like, kudos to you for being able to just like dial it down and in. But I even think this is very controversial because there's no guarantee. It's very rumor at this stage. Jeremy loves it when I go controversial, by the way. But like, think about if and when there was ever a world where now the lender does have to pay for title insurance, that that's an opportunity for them to go, hey, I want options. And if one of those options is let's commoditize it in a way with blockchain that makes it not only easier, faster, probably more reliable, but less expensive. Like, sorry for all my title friends, they're probably gonna like call my phone's gonna blow up any minute. But you know, I
I'm
mean,
in the same boat as you.
that's a potential transformation opportunity. And Jeremy and I have talked about this on previous shows that it is possible that sometimes the weirdest oddball edge case thing is going to be what pushes our industry towards advancing from antiquated to like welcome to the 21st century, including myself learning new acronyms. But this could be one of those.
I mean, when you think about another like use case for it, think about insurance companies. Think about when you go to file a claim. If you could just easily file a claim, it gets put on a distributed ledger and you have that there forever. That is like a quintessential poster child for blockchain technology. And you can make use cases all across real estate, mortgage. It's just more so getting people comfortable because again, they think that like there's robots out there and they don't understand it. I've kind of been trying to bridge this Web 2, Web 3 gap long enough where I know not to say crypto. I know not to say like tokens. I know my audience and I know what I can and can't say because as soon as you go off that cliff, they put a box over their head and the conversation's over at that point.
I mean, at least now there's jokes around Gronk and crypto that can be fun. But...
I think one of the things I've been surprised by, I think our collective instinct is to talk about speed, efficiency, customization, obviously access and affordability in this conversation. But, you know, Eric, I've been surprised because what we're really talking about is better data, real-time data, customizable and personalized data. When you get into the world of the consumer, the more customized and personalized the experience, that's huge. That's huge across big tech. That's huge across consumer advocacy policymakers. So is it just that there's such a fear, there's actually a resistance to even using terminology that implies the future? Or to put it another way, how are you breaking down those barriers in your work?
A lot of it, you know, there's two areas we're working with today. I mean, our customer is the lender that's in the exchange that is looking to have a new customer or a member come on board with them in their loan portfolio and offer them solutions and services. The other side of it is our product is communicated with the customer and the consumer, the human themselves, right? So that's the part that, you know, learning that piece, like Sasha just gave the compliment to Courtney, and I second that as well. Great job. Go a step further. How do you say, like that stuff doesn't need to go to a consumer. They just want to know, can you get me a loan? Is my information saved? Make it fast and easy for me. It sounds easy, but it's not. And, you know, some of the groups that we've worked with are specific on that consumer behavior and consumer emotion and consumer understanding of what do they really want? Are they ready to get what they think they want? Well, maybe they're not. How do you empower them? And there's a lot of things that go into all this. And I think we're at a point now where open banking, which is what we're describing here, open banking is where you see in apps today, like the Nerd Wallets and the Credit Karmas and Credit Sesames and those kind of groups. They're getting adoption that just keeps climbing. So that part's not as hard as it used to be or think it was 5-6 years ago. Now it's the, what are you going to do with it and how does it really help me? And, right. You know, we're at that point now.
Am I actually going to save money?
Am I going to save money? And then if the lender, really all the lender has to know is the consumer is coming with their own data and you're coming with some data pieces and some analytics without bias. Now you take it from here. How do you pile on that as we go through the process? Because remember, the mortgage industry, I've said this in the past, it's like when you're driving down 95 or wherever you're from, you know, that major super highway, it's like following that chicken truck and the feathers are just like flying around. Someone I used to work with said that, you know, where that the truck's like bouncing up and down and there's like feathers flying everywhere. That's that's like a loan portfolio traveling down there with papers just flying everywhere. Like you can't keep it. It's just everywhere. You can't keep track of it. You're like got to swerve around things. And it's like we're at the point now where I think it's exciting because we're in 2024 and we are at the point where open banking has been normalized. The acronym AI has been normalized. Consumer understanding their rights and how to understand their own data is becoming more normalized. What's not normalized is how does it get synthesized together to where all parties understand their role in it? And what are the objections that you have to deal with your role that's involved with it? And then communicate that with every party involved. That's the key, right? That's the hard part that we're all working with together. And it comes back to what we were saying earlier.
I have a fun question for both. Oh, sorry, Eric, you're not done. Continue.
No, just how do we all work together to get there and get peer feedback and say, hey, you know what? This is what hit me. This is how if you guys thought of it this way, like that's peer consulting. I don't know, whatever you call it, but go ahead, Sasha.
I was going to say, if we like went from now, we went to later, and I want to like play with next for a minute. And this is my first time asking it this way, but if we'll go Eric, you first, then Courtney, you second. If you had a magic wand and you could wave it, and tomorrow you got one thing in the industry that helped move us from now to next, what's that one thing?
I have mine if you want me to go first, Eric.
Yeah, go ahead.
Action, pure action. There's a lot of noise within the space, a lot of people saying, okay, this is really cool, this is innovative. All we need is action. So people actually converting to users or converting to whatever we're doing, that would be, I think about it literally every day, all day.
And what do you think is stopping them from taking even just a small step in that direction?
I'm going to say for me personally, finding someone, I'm right now side skirting a legacy industry of real estate and then also in the crypto world. The crypto world doesn't want a 5 cap, 6 cap. They want 300. And they're getting that. So trying to say, hey, if you're a sophisticated investor, you're going to want to diversify, having that narrative, they just don't care. There's some people that do think it's really innovative, and that's who we've probably sold our homes to. But I think for Eric's case, he has a little bit more leeway on his end. I don't know. I could be totally wrong with that.
So I'm hearing you need an investor that's willing to just try and like give it a shot.
Yes.
But what makes an investor want to try?
Money and fear of not making the bad decision that makes their role detrimental. Meaning, I'd rather make the decisions I've always made because I'm safe.
Yep.
If I step out just a little bit and it's the wrong decision, I'm out. Yeah. And that's the thing. The second thing I would say is capital markets, which goes to what Courtney said, action. All of our business is driven by the secondary market. If the secondary market either looks at things differently, adjusts the way that portfolios are securitized and priced, or thirdly, opens up a new pipe saying, you know, here's the pipes we've done and we feel comfortable with. We're going to assess preliminarily and then provide additional access of capital through this new pipe, because we need to look at things differently. We're not going to affect what we've done today because that would just mess up the whole model. But let's just say what we like, what we see and hear. Let's go through testing. Let's really look at this intelligence that you're talking about. Let's look at the consumer behavior. Let's really correspond what we've done with what we think we can do in the future, and we'll put some money behind it. So that's the action. And my feeling is action by secondary markets and capital markets, because they drive it from up here. Mm-hmm. And when they drive that down, then you've got servicers and lenders and everyone else involved that says, well, if I could have a couple basis point pickup along the way, now I feel a little bit more comfortable at making this change because I have a safe exit. Got to have a safe off ramp.
Do you feel like there's a revival, but with a new face for PLS in what you're saying?
Yes, that's what I'm saying. I didn't want to acronym it, but yes.
Okay. I'm just trying to like consume it myself and understand.
Yeah.
Who's the ideal?
Oh, I can't say that. I don't know who the. Then I'll
Well,
get a
think
bunch of
about it
texts.
this-
Why didn't
well,
you
wait,
mention
wait.
us?
Think about it this way, which is we get a lot of eye rolls. I think Sasha and I specifically,
100%.
when we talk about storytelling as a necessary component for innovation.
Mm.
However, what we're talking about here is exactly what hedge funds do in their world to determine where do I have a data advantage, a timing advantage, an information advantage, and then they capture that for as long as they can until the rest of the market catches up and meets them, and then they find another advantage. And I think, Sasha, what you're saying is the right investor here is one that recognizes there's an advantage to the thinking about the world this way because I'm going to have more data or a lower risk or both when I invest this way. And I should start to put some of my portfolio to work that way because I might be right. And if I am, I want the advantage on everybody else until they catch up, and then I'll find another one. And I think the thing I like about this conversation is the downside is you tried in an area of the economy that's fundamental to politics and social policy, which is home buying. So what's the worst thing that happens?
Drives
You
GDP.
tried a thesis. Yeah, you tried the thesis to create net new homeowners and invest in communities. Like that to me is a pretty okay downside that at least we took a shot at it. If you were trying to bring in new investors, bring in that new story.
Yeah, you hit right
Good way
on
to put it.
Ellen, right?
Yeah.
And they're out there, they're just not here yet. And
They're not hearing it.
this feels like the, yeah, right, double entendre.
Yeah.
I need to get here and I need you to listen here. But I think if they did, like, gosh, talk about something that could be that like flame that catalysts, you know, that's not the right way to say it, but is the catalyst for pushing us towards something that's very avant-garde.
Just hand the torch to Snoop Dogg and let him run around with it and get the message out, right? I mean, that's how we got to get this going. That's what
Yeah.
Courtney told me when we caught up.
Yep.
Hey,
That's
before we stop, Courtney,
Last
you
thing.
mentioned something to me last week, and I thought it was really great. But we were talking about, I don't want to throw another term, but I'm throwing it to you. We talked about the overuse of certain terms, fractionalization, tokenization, all that kind of stuff. But you had a great example. I think it was a great close for this show about what you experienced and what you saw of a solution that brought, what's the word I'm thinking of? It was a solution that you talked about that brought all stakeholders involved,
Yeah. Yeah.
increased revenue, the time, all the things we talk about, you actually did it. So share that with us.
So without going into like full blown DeFi jargon, it's almost, think about it as what I've seen in this space is that the underlying asset being real estate, people, when you're talking to a crypto community, and I preface it with that, they do not care about the underlying asset. It purely boils down to the revenue that's generated. So we have tokenized revenue generating assets, thinking, okay, this is great. We're tokenizing a home. No one's ever done this. Everyone's going to love the fact that real estate has been tokenized. We're very much a proof of concept. We've done so many like market analysis that shows us it doesn't really, the asset is not what's going to drive people to buy the token. So when you think of this concept of, okay, there are real estate investors, they own the asset, and then you have the other spectrum of people that they want the revenue. We've lumped them together and thought that that was who our customer is. So you have these two people, this person buys the token, they own the underlying asset. They can now what's called stake that token, that asset, and they can essentially sell the revenue that they're making to people on the back end who are interested in just the revenue portion. So when you talk about like a compressed cap rate due to whatever reasons, market volatility, whatever it is, you have someone that says, I want this house on 123 Main Street. I believe that this house is going to 10x whatever my exit strategy is, but the cap rate's not where I want it to be. I'm solely interested in the asset. They stake that token, if you will, but it really is just the ownership. They keep the ownership. They stake their token, and someone on the back end says, look, I need to diversify my portfolio. This is a tangible asset. I can without having to KYC, without having to jump through hoops, have an intermediary, fully permissionless. They can say, okay, I now am getting the revenue off of that asset-based token in a matter of seconds. Not the interest has to come in, but by means of actually transacting and executing the transaction, it happens in seconds. It's a digital wallet to a digital wallet, and it's there.
Think about what a REIT throws off as revenue, or it's like that, or a Schwab slice, if you're familiar with that. Schwab has these slices where you can get a piece of the dividend that comes out of a fund, and you don't want to buy the whole thing. I just want the dividend piece that comes from it. I'm going to invest in that. And that's what she's describing. It's cool.
Yeah, we live in this like TikTok, I like to call it, mentality, where if people have to go, and Eric, maybe you see this, like the less is better for the consumers. If they can just say, hit now, buy, like if they have to KYC, if they have to do XYZ, they're going to save it for later, and they're probably not going to come back to it. So if you can make it as seamless, easy as possible, where it's a one click, there's not a thought process, there's not a, okay, I actually own something now, do I have to maintain it? Take that guesswork and those questions that they're asking themselves internally. If you can take that off the table, it makes the conversion to the action much easier and much more digestible to that either token holder in real estate or the person that's just looking for the returns.
Yeah, it sounds very akin to what's happened in IT in our space around, like, call it Lego blocks, or like stitching and restitching together, but for financial investment.
Agreed. And consumers are trained. I've been saying this a few times on Now Next Later, Courtney. I think consumers are trained to understand more and more about the ecosystems, brand ecosystems, financial ecosystems, technology ecosystems that they operate in. So they know, hey, look, I'm going to get Marriott Bonvoy points. So I'm going to search out. And I think what you just described is Marriott doesn't even have to own the building. It's just Marriott owns the ecosystem and the experience, and that's what consumers go for. And then the value kind of flows from there.
You just brought another term up, and that's for another show, but gamification and rewards, right?
Yeah.
It's all, I don't know about you guys. I'm all about, oh man, I can get 100,000 points if I do this in 90 days. And that's for groceries and eating out. And this one's I get 3 times if I do, like you can find that. There was actually someone that we know that does that for a business, because it's just a lot of information to take in, and then they simplify it, just like we're all just trying to simplify what we do to our business partners and the consumers. I don't want to know how he got it all. I just want to know, if I got these 3 cards, what would I earn additional in rewards based on my spending last year? Oh, 6 times more. All right, let's do it. I'm sold.
Yeah. Why wouldn't that come to renting and owning as well? I mean,
Renting and owning.
Everything else. So why wouldn't it come to renting and owning? Yes.
Yes.
That's right.
Yes.
Excellent. Well, on that note, thank you so much for joining us. I know I speak for Sasha when I say we could keep this conversation going all afternoon. I absolutely love talking to both of you. This was fantastic. Thank you.
It was fun.
Yeah, thank you both for being. It's great.
All right. Check it out. Talk soon. Bye, everyone.
We off?